Pat, Dalata is Ireland's largest hotel operator by some distance, with a portfolio of 31 hotels, including the Clayton and Maldron brands. The company only started in 2007. How has it been?
Wonderful in the beginning, and I suppose when you think back to 2007, we were at the end of what we would call the Celtic Tiger era. We didn't recognise it at the time that was the case, and we bought the business. We bought 11 leasehold hotels at that time in August of 2007, and the whole idea was to build a platform in Ireland and then expand into the UK. Unfortunately, events, dear boy, got in the way, and we then found ourselves in 2008 in crisis, and that rolled on into 2009. But we were lucky. You know, people say you had great strategic vision in 2009 that you got into management contracts. Didn't happen like that. Actually, somebody came to us and started a thought process that there could be more of this. So by the end of 2009, essentially, we were the go-to guys in management contracts in Ireland. So as banks appointed receivers then appointed us to run those hotels, which meant that we got very good fee income out of that, which meant that we were then in a very strong survival position. However, if you were to roll that forward and you said, what is the outcome of this? At some point the banks are going to sell, and we recognised that. So we did have strategic vision for what was going to happen post, I suppose, the end of management contracts, and we knew that banks would be selling hotels at below cost, essentially.
And there was an opportunity there for you.
Correct, and therefore we decided that the best way for us to participate was to go out and raise funds to do that. And that's exactly what we did. We floated the company in March of 2014. We raised at that point 265 million in equity, raised 282 million in debt, and we raised another 150 odd million in September of that year. So in all, we've raised between just under 800 million between debt and equity over the last number of years, and we bought all of these hotels at really amazing value. And like, I suppose we were again very lucky that, coupled with the buying of those hotels at well below replacement cost, the markets recovered very rapidly, much more rapidly than we had anticipated. So we had a lot of luck on our side, but we had a bit of vision as well. So that's I suppose how Dalata came about. And I suppose, you know, the value of having a large hotel operator in the country is I suppose can't be underestimated. We talked earlier about the fact of people and people development and what we can do. Ironically, Dalata is the largest hotel company ever to exist on this island, and it has two brands who are the largest hotel brands ever to exist on this, and yet we're only a very short time in operation.
In existence. And how many staff now across?
4,500. Now that includes our 10 hotels, obviously, in the UK as well. So we are a very large employer. I mean, we'll have turnover, if you believe the analysts, of 300 odd million this year. We'll have profits in excess of 80 million again, if you believe the analysts. So we are a strong player in the Irish market, and you know, we're not finished by any manner of means, because at this point in time we're building just over 1,200 rooms. Most of those are in Ireland. The bulk of them are in Dublin. 600 rooms in Dublin.
Badly needed in Dublin.
Badly needed in Dublin, and you know, it shows that it's not that easy to build hotel rooms in Dublin, where you're competing with offices and residential for sites. So it's not easy to do. But we're building those hotels in Belfast, Dublin and Cork, and a small addition in Galway. And I suppose the other thing that people forget about is that when we're doing that, we have over 400 construction workers on site today, and they are part of what we're doing. We're paying for all of that.
So I suppose by building those hotels and constructing those new developments, you're still quite positive about the sector and about the industry going forward.
We are very positive about it. Like I suppose you have a lot of dynamics going on, particularly in the Irish market, where you have no new supply, essentially, or very little coming in, and you have growing demand. And I suppose demand sometimes is misunderstood as to how, for example, in the cities, demand works as opposed to, that it's not pure tourism. Because essentially, if I look at the change in the business mix, let's say between 2012 and 2015, 2016, it's really the return of the corporates that has made the big difference. So, you've had a lot of changes structurally since, I suppose, the peak in 2007, 2008, where, we've added double the size of the airport. We have a new convention centre, 3 arena, Grand Canal Theatre, a new Aviva Stadium, all of those things. And then if you implant on top of that the effects of what I call the Google effect, it's not just Google, it's like Amazon, it's Facebook, it's all of those technology companies
which are now located here.
Correct, and are what we call avid hotel users. So they have changed the market, and you could take places in Cork the same, whether it's Apple or Pfizer or whatever it is, go to Galway, Boston Scientific, Medtronic, and all of those guys. All of those guys are great users of hotels, and all of those have seen significant uplift in their own fortunes, and that helps us as well. So, when you look at it, it is not purely a leisure market play, because that's always much more vulnerable to absolutely, shifts in the market and shifts in currency and all of that. So, we would be extremely positive on the outlook for Ireland in its totality.
And room rates, as we all know, have gone up quite considerably. Correct. In the last 12, 24 months. There are concerns that we're losing competitiveness, or we're not offering as good value for money as we were, which is undoubtedly the case. But where do you see room rates going? Demand continues to outstrip supply, and supply is finite or is slow to materialise by its nature. Yeah. How do you see room rates going forward?
If you take simple comparisons, and you can't include places like London, Paris and Rome, because they are different cities and their room rates are very different to ours. But we should be equal to somebody like Barcelona, Amsterdam, Copenhagen. They're kind of the cities of similar nature to Dublin, and yet we're anywhere between 10 and 20% behind in their room rates. Like, we're still number 1 in terms of occupancy. We're about number 11 or 12 in room rate, and it's not a coincidence, the fact that you have had very little development in Dublin, and part of the reasoning behind that is the economics simply don't work. Because if you have relatively low room rates and you have relatively high input costs in terms of build and construction and sites and all of that, economically it doesn't make sense. That's why you don't have a rush of developers and builders coming in to build hotels in Dublin.
Is there more to it than that, in terms of, are the banks or our funding partners still slow to sort of support hotel developments? Is planning still an issue? Is it kind of multifaceted in terms of spurring on developments?
It's multifaceted. I mean, you have fundamentally, like, the planners, to be fair to them, are working on guidelines, and I suppose, we have this issue around height, but that's not the planners' fault. That's our legislators who have this restriction on height. The planners only do what they can do. So the planners are not the issue in that sense. But one of the big issues is finding sites and then finding funding, because the banks are not doing development funding at all. So you're reliant on other sources. Now, we're lucky in that we have plenty of equity and plenty of debt to actually build the hotels that we're currently constructing. So we're in a better place. But if we were out looking for bank funding to do development work, it isn't there.
So some of the, if you like, non-Dalata hotels that have planning permission within Dublin, they may never see the light of day, or they may be slower to see the light of day because of the funding obstacles.
They will be slower to see the light of day, and I suppose as you get into, like, if I look at new product coming on in 2017, it's tiny. There's 250 additional rooms in 2017. It's the height of it. CBRE Savills reckon there's about 1,100 gross rooms coming on in 2018. Now, 600 of those are ours, and the rest then is made up of extensions and 1 or 2 other properties. But essentially, as you move on into 2019, there seems to be more activity in terms of new supply coming on. But what will happen is, as supply starts to move, the guys who are coming in late looking for development funding will find it more difficult, because banks will say, well, this is a bit more risky because you've already had 2,000 more rooms into Dublin, and therefore
the demand supply relationship has changed.
So banks will get more cautious in terms of their funding, and in reality, banks are not lending now at all for development. So unless somebody has development funds coming from somewhere else, if it's reliant on the banks, it ain't going to happen.
What's your take on Brexit? I mean, we in the tourism industry are concerned that it's going to lead to a softening in demand, certainly in leisure demand from the British market, and that may in turn impact on the tourism industry here. Do you have any views on it?
I'm not sure that that's going to be the case at all. I think the UK market has always and will always be extremely important for us. And this notion that we can go out and create new markets and things like that is not that simple. The food guys are in the same place. They still have the same problems as we have. It's not that easy to create new markets. So my own view is that the UK market post-Brexit will be as good as it is today. I can't see why it should be any different. And it's all to do with the underlying strength of the UK economy. If that remains relatively robust, our markets will do well on that. Because don't forget that the UK consumer has exactly the same issues wherever they go.
Yes.
So, and Ireland is a relatively safe, very comfortable destination for them. So, in my view, it will continue to be like that.
And of course, market diversification requires the state to commit to marketing funds to shine a spotlight on Ireland, and those
Yes.
marketing funds haven't materialised to date.
No, and I think that's fundamentally a big problem in the sense that, like, you know, it takes a long time. So if you're kind of starving the industry of funds today, it's not necessarily today or the next year that that's going to affect. It's the following years and the following years, because you have to continually to be building and reinforcing what the product is about. And that's the danger, that we assume that it's fine, but of course it's not.
Yeah.
And to be fair to the government, like, you know, the reduction in VAT has been of tremendous help, and, you know, we would dearly hope that that will continue, because, you know, this notion that has cost the Exchequer X number of millions of euros to fund that, in reality, because of the increased volumes, in my view, it has cost the government nothing. And as part of that process, they've created in excess of 40,000 new jobs. So it's fundamental that that remains in place. And then, of course, new product, particularly like the Wild Atlantic Way and the Ancient East, all of that is great. And you know, the kind of these new ideas, new developments are great for the country. And, you know, we need to keep doing more of that.
Absolutely. What's your take on Airbnb's success?
Airbnb, I suppose, is a phenomena, and you know, it's what we call a disruptor, and you know, at some point, my own view is that there will be some legislation and regulation. You're already seeing that happening in certain locations in the US and in Europe, and you will see more of that, because, you know, it is the Exchequer that will lose out at the end of the day if it's not some control. And if you take some place like Dublin, where people will switch from normal rental accommodation into Airbnb, that's taking valuable rental space out of an already tight market. So my own view is that if you look at Dublin today, we don't see the effects of Airbnb, simply because there's not the same level of demand. But if you look at some place like London, where room rates are particularly high, Airbnb has made far more attraction. And the same in Paris, and the same in Rome. It's a bigger issue for those guys, and you'll see the same in the States. Places like Boston and New York have a stronger penetration of Airbnb, whereas like DC and places like that are less so, because room rates tend to be lower. So they're the kind of things, but to my mind, what you will see is some form of regulation that has to happen there.
Yeah. Are you confident for Irish tourism over the next few years?
Absolutely. I mean, why would we be building the guts of 1,000 new rooms in Ireland, you know, today? We are confident. You know, we've built a great business. Quite frankly, we have great physical assets. We have great people, which are core to everything we do, because it's fundamental to us to have the right people in the right place, simply because of the way we manage our business. So we would be very confident about the Irish market and the continuing ability to grow it.
Pat, thank you very much.
You're welcome.